Op verschillende plaatsen in de wereld wordt de bevolking steeds ouder en daarmee nemen de kosten voor gezondheidszorg alleen nog maar meer toe. Het gaat in de richting van een niveau dat het gewoon niet meer betaalbaar is. Nou, gelukkig is er de afgelopen jaren enorm veel geïnvesteerd in nieuwe technologieën om uiteindelijk de kosten voor die gezondheidszorg naar beneden te brengen. En daarover gaat deze video. In Nederland hebben we eigenlijk alleen Philips die zich in dit segment begeeft. Dus moeten we weer kijken naar het buitenland om beursgenoteerde bedrijven te vinden die erin zijn gespecialiseerd. En daarom ben ik blij dat Richard Lightbound van ROBO Global, die een specialisatie hebben op dit gebied, wederom bereid is om in deze video zijn kennis met ons te delen.
Okay, welcome Richard. Good to have you back again with Markets Are Everywhere for again another interesting topic. Today we will still talk about technology, but specifically in the healthcare world. Yeah. And I look very much forward to it because I think it's a neglected part to some extent for many investors. Everyone talks about the big tech and e-commerce, but in healthcare there's going on a lot as well, right?
Absolutely, and yeah, pleasure to be back, Jean-Paul, and as you say, focusing on our healthcare tech and innovation.
There may always be people who are not familiar with ROBO Global yet, so could you please introduce your company to us as well?
Yeah, no, I'd love to actually. If we look at slide 3, I can just give you a quick introduction. So we're a private research and advisory company. We're focused on disruptive tech and innovation investment opportunities. On the left-hand side of the slide here, you can see our 3 strategies to date. We've got the 12-month performance for each of them. I should just emphasize that performance is up until the end of April 2021. As Jean-Paul was just saying, the focus today is going to be our healthcare tech and innovation strategy. We call that HTech. That's the index ticker. You can see there that it's had 69% performance over the past 12 months. And we'll get into more detail here, but I think it's really important to stress, like our other strategies, that performance is coming from a very broad universe of companies. There's actually 83 companies around the globe in this HTech strategy at the moment. Each has 1 to 2% positions roughly. So it's not a concentrated portfolio where we've got a couple of stocks driving that performance. But just going back to ROBO Global, so we very much believe that the best way to tackle this sort of an investment opportunity is active research guided by industry experts and then really combined with what we call the quantitative benefits of indexing investing. We'll come back to that in more detail. We think it's very powerful. It really is the most appropriate way to tap into the growth and returns opportunities from something like healthcare tech and innovation. We also believe that our time at ROBO Global is very much best spent researching our themes. So we engage with industry companies on a regular basis. We meet their management teams. We score each company across various criteria. And we then have product partners globally who launch ETFs and funds. In Europe, we work, for example, very closely with Legal & General or Elgin, who've launched ETFs tracking our strategies. If you look globally, there's about $4 billion globally tracking the strategies with products listed in the US, here in Europe, and also in Asia. You know, if we just step back for a moment and really switch our attention as well to healthcare, you know, this is an enormous market. We're all pretty familiar with the data, but healthcare is an $8 trillion industry globally. It's absolutely enormous. To give that a bit of context, if you look just at the US economy, healthcare accounts for about 18% of their GDP. So, you know, we literally cannot spend more money on healthcare. Instead, we need to focus on technology and innovation that can really provide a better system for patients, for the hospitals, for the surgeons, all of the workers, and also the payer community as well. And Jean-Paul, we've got a short video. I thought it might be a good opportunity just to play that now. And just
let's have a look at it. I'll start it in.
Okay, great.
Global health spending accounts for 10% of the world's GDP. Over the next decade, with life expectancy and chronic disease on the rise, annual expenditure will likely exceed $10 trillion. This price tag comes with an alarming degree of inefficiency, with several hundred billions of dollars per year considered waste. Throughout history, inefficiency has been the birthplace for disruption across every sector. And for healthcare, that time is now. ROBO Global presents HTech, an investment strategy comprised of the most disruptive companies in healthcare today. In a race to meet the vast unmet needs in healthcare, new scientific and technological breakthroughs are driving research and development at an unprecedented pace. Thousands of companies are working to address the world's biggest health issues, like curing disease, reducing nurse and physician workload, and improving diagnostic accuracy. All this innovation is creating a multitude of compelling, yet complex and rapidly changing investment opportunities. To help investors navigate this environment, ROBO Global created the Healthcare Technology and Innovation Index, HTEC, tracked by ETFs on the New York and London stock exchanges. HTech provides unique and diversified exposure to the most innovative companies in healthcare. To construct the HTech portfolio, our team of analysts and industry experts apply a deep, research-driven methodology to identify the companies that are defining the future in the fields of surgical robotics, 3D printed implants, next-generation gene sequencing, and many more. The result is a global diversified portfolio of small, mid, and large-cap tech-forward companies that investors don't typically own. This is what makes us unique from traditional healthcare indices, which are more heavily weighted by large-cap pharmaceutical companies. HTech's diversification enables investors to capitalize on the faster-growing and more nimble innovators. This backtest shows HTech's historic returns compared with the Global Healthcare Index and World Equity Index. Healthcare's technology revolution is now. Invest in innovation. Invest in HTech.
Well, that sets the scene, Richard.
Yeah, it does. And I think everything that we were talking about in the video, we'll sort of go into a bit more detail. But let's start on slide 7 here, because you know there have been some absolutely amazing advancements, breakthrough in healthcare. I think some of these examples are really telling. We've now got well over 5,000 robots in the world's hospitals assisting surgeons. This is helping them to perform anything from prostate to gynecology procedures. AI is being extensively used. It's still just scratching the surface. One very common area is helping physicians really increase their accuracy as they're looking at medical images and biopsy reports. We can look at 3D printing. We're now 3D printing implants for organ and bone transplants. We've got miniature heart pumps that are literally so small they can be inserted through the femoral artery. Wearable devices that are measuring and delivering insulin seamlessly. And I think one of the most important areas, and we'll come back to this later, is around gene sequencing. But this is now really enabling the detection of diseases at very early stages. It's allowing us to develop customized or individualized treatment plans. We've already got the first gene therapy treatments being approved by the FDA. One of the very first ones was to treat a very acute form of leukemia. And if you actually look in the pipeline in terms of clinical trials around finding cures for different types of cancer, we've never seen so much activity. We've literally got the queue just more than doubling every year. So I think what's important here is, while there have been a lot of really interesting developments, if you look broadly at what's happening with robotics, AI, life sciences, it's still very much in the infancy. It's still very early days. And frankly, the need by society has just never been greater.
Yeah, what always comes to mind with me when I see a chart like this is it's very obvious there's a trend. You say there's more activity than ever before, but can you identify a specific reason why it is happening today? Is that because of all these years of investment? What is the trigger that it's coming to the market in the coming decade?
Yeah, I think, I mean, look, we can talk about macro factors, Jean-Paul, and, our view is that the technology now has really reached a level where it can significantly help with some of the biggest challenges that we're facing in healthcare. So I think if you just jump to slide 9, we've got an aging population in all areas of the world. So the population is getting bigger, but the portion that is elderly is growing more rapidly than any other section. That's clearly going to just drive up demand for healthcare. It's going to drive up costs. We've also got a healthcare system today that effectively responds to chronic diseases. So what I mean there is we literally almost have to wait for people to get very, very sick before we identify a problem. We then bring them into this environment with lots of other sick people. It's a hospital, and we then treat them. But if you look at the amount of that 8 trillion that gets spent on chronic illnesses, it's staggering. It's over 90%. So that's what we've got today in terms of a healthcare system. We've also got a real shortage of skilled workers. I think that the COVID pandemic really sort of highlighted that. Another, amazing statistic here is in the United States, the most common form of death relates to heart disease. Number 2 is cancer. Number 3 is medical error. It's absolutely staggering. So, I think we've got a lot of big macro factors that are telling us why this is happening now. Technology and innovation, as we all know, is very, very different today to what it was 5 and certainly 10 years ago. That rate of change in terms of deployment, adoption, technology getting better, technology getting smaller is just enabling us to do more and more. But I think if you don't mind, Jean-Paul, if you just go back to slide 8, if you just look at where healthcare is today, this is a map that was produced by McKinsey, and it's showing the main economic sectors in terms of digitalization on the horizontal axis. And then we've got the productivity gains recorded over a 10-year period on the vertical axis. So anything that's sort of up and to the right-hand side, these are sectors that are most digitized with generally, you can see they've got strong productivity gains over the past 10 years.
Sorry, I think it's this one, right?
Yes, it is. Yes.
Yeah. Apologies.
That's right. So you can see in the middle there, we've got healthcare is the green bubble. The bubbles are actually representative of the portion of GDP. So healthcare should be a lot bigger, but it would obscure its neighbors, and its neighbors are mining and construction. So
okay, right. Yeah.
I think the chart's telling you we've got a long runway ahead of us. And, back to your question, Jean-Paul, our research is telling us we've reached that inflection point. This digitization of healthcare is absolutely happening right now.
Yeah.
So maybe, Jean-Paul, if we go to slide 10, I can just sort of, talk about what we're trying to tackle and incorporate in the HTech strategy. If you just go.
I don't. All right. I see.
Yeah, sorry, I jumped around just to confuse you. So really, as you look at our HTech strategy, there's really sort of 4 pillars, if you will, in terms of what we're incorporating. So first of all is this shift into digital infrastructure. So today's healthcare world is incredibly analog. Secondly, we've got a shift from a very centralized model today to something that's going to be much more decentralized, where rather than having the hospital at the center of the sort of patient journey, it's going to be much more the patient themselves at the center of that journey and in control of what's going on. We're absolutely moving, and we're capturing it as our third area, to a system of early detection and prevention versus sick care, as we were just talking about. And then the final pillar, if you will, that we're really capturing here is this deployment of robotics, automation, AI, really assisting where we've got that shortage of skilled workers, or just simply performing tasks that, you know, nurses, lab practitioners, surgeons don't need to be doing, when their time can be more productive elsewhere and more directly involved with patients. Jean-Paul, I was going to talk a little bit about signals. I think, you know, you've got investors as your audience here. We all like our signals. If we look at slide 11 here, let's just start in the private sector, where basically we're seeing unprecedented amounts of capital being deployed into healthcare startups to fuel further innovation. It's just staggering. We've seen VC funding triple over the past 7 years to 2019. It's just continued accelerating upwards since then. If you zoom in specifically on AI, it's clearly a very important tool in healthcare. It's touching every aspect of the patient journey. And if you look at the AI startups in the healthcare sector, they're receiving billions in VC funding, and it's growing at the fastest rate of all of the other areas of healthcare tech. It's got a figure of over 50%. If we go to the next slide, Jean-Paul, we can just look at what's happening in the public markets. I think, again, there's a pretty clear signal. Something interesting is happening here. So this chart shows the performance of our HTech strategy. That's the green line. Again, it's a portfolio with 83 companies in it. And you can see at the end of 2020, HTech was significantly outperforming global equities as well as healthcare equities. We had, as we said earlier, more than 60% gains in 2020. You can see in the table at the bottom here, the 3-year to 5-year annualized returns at 38%, 36%. I do want to emphasize that anything before May 2019 is a back test of the initial portfolio, and obviously past performance is not.
Right, so it's a dotted line that we see in.
Correct, thank you.
Yeah,
no, absolutely.
What puzzles me when I see this chart is that, you know, obviously we have seen a technology boom, we have seen a green boom last year, but although you clearly link it to AI, is there also any other driver behind this, or is this the general trend in technology that we see here?
Yeah, technology is the enabler, Jean-Paul. So, you know, all of this tech and innovation that, you know, we're trying to capture in this strategy, absolutely, it's enabled by technology. So, you know, I mean, we can look in a bit more detail, but, you know, this isn't a strategy where we're trying to sort of, you know, tap into large pharmaceutical companies. We don't own the insurance companies. We don't own the hospitals. You know, we don't own the therapy companies. If we actually look at slide 13, actually, we can go into a bit more detail. So you can see here that the HTech index, again, in green versus a global healthcare equity index, which is in black. And you can just see visually, I mean, HTech's got very limited exposure to traditional pharmaceutical companies, which we actually expect to be pretty significantly disrupted. And, you know, tend to account for 40% of global healthcare funds. We've got much higher exposure around hardware and software providers, as well as biotech companies, but those are primarily involved in genomics and precision medicine, the biotech names. You can see we've got just under 20% exposure to life sciences. And, you know, this is important. These are the companies that are providing the picks and shovels for this, you know, gold rush, if you will. So this is a tech that's behind the research and development efforts.
So no vaccine makers here. Well, this is really the technology part of.
Yeah, I mean, no, yeah, we have companies that are involved, you know, have been beneficiaries, if you will, of COVID. So they've been involved in, you know, the the sort of the testing, the deployment of COVID vaccines. We've got companies in telehealth that are being, they've seen the adoption of their sort of client base really accelerate through the COVID crisis.
What you say, the enablers, right? The enablers
Correct.
of those kind of
Correct.
processes, right?
Correct. But
Clear.
it's not. I think the important point is it's not a portfolio that's focused on large pharmaceutical companies.
No.
So actually, if we go to the next slide, we can actually look in a bit more detail at sort of, what we are giving investors exposure to. So we very much research and evaluate this opportunity across these 9 subsectors, and we've identified these very, very carefully, really, as representing the biggest opportunity in healthcare tech and innovation. And we've built this industry classification simply because if you look at GICs today, they don't accurately capture or represent robotics, AI, or any other technologies that are really powering the healthcare revolution. So just like with our other 2 strategies, we've built our own industry classification. This very much serves as our map, and we analyze companies through this lens to measure, not just their revenue exposure to the subsectors, but to a number of other factors that we can talk about in a moment. But Jean-Paul, I was going to maybe just zoom in on a few of these subsectors, if that sounds okay.
Yes, please do.
Yeah. So look, no particular order, but lab process or automation. We think this is a great example of a subsector, that's going to get a lot more attention over the coming years. The automation that we're seeing in sample testing in a medical laboratory, it's absolutely full of innovation. We've got molecular diagnosis is one of the fastest growing areas of life sciences right now. You'll see companies like Brooks and Tecan sitting in this subsector. Genomics we'll probably come back to later, we've got time, but what we're looking for here are the providers of technology for the analysis of genetic data. And this includes next generation sequencing tools. We're also looking for companies that are bringing to market the testing for the early detection of various illnesses, as we were talking about earlier. We've got really strong representation of genomic companies in this strategy. Digital health is a really important trend, and it's emerging. It was so big, we've actually created 2 subsectors around it. So you'll see data analytics and healthcare, both capturing what's going on in digital health. Digital analytics, we've really got the software and the solution providers that support clinical trials. They manage medical information. So personal health records is very much at the heart of what these companies do. And really, with a lot of the technology expertise that we've developed with the other strategies, we've got a strong understanding of data management infrastructure, how AI comes into play here, and really the ability to share health data among these many, if you will, quite complicated participants. So hospitals, physicians, and the payer community. So you'll see companies like Tabula Rasa and Vocera in that subsector. Telehealth, obviously a hot topic the past 12 months. This is all about patients taking greater charge of their medical needs, being able to talk directly over their smart device with the physicians. When you start to combine this with genetic data, electronic medical records, the Internet of Things, we're really seeing this whole ecosystem of companies build out that are starting to work together pretty seamlessly. So we've identified a lot of the early pioneers in this subsector. You'll see companies like Ping An in China, Telehealth in the US in the strategy here. Let me just touch on 2 others, Jean-Paul, if that's okay.
Yeah, right. There's a lot to discover for people who are new to the theme. So any examples that you can share with us are very helpful. Yeah,
you're absolutely right. There's so much more sort of going on and in here than people would realize. So there's another subsector here, regenerative medicine, and this has seen massive innovation. very focused on treatment options for nerve repair and the regeneration for trauma or breast cancer procedures. So Axogen actually has the only commercially available nerve allograft to repair peripheral nerves. It's a really new solution in the market, and Axogen's solution is really providing something that's a lot less invasive. It's a lot more economically attractive versus today's procedures, which are autograft. We're literally via the autograft process harvesting nerve from other parts of our body, and that clearly adds time, cost, and discomfort to the procedure. And
can you say something in general? Is it a competitive industry, or is it really one company finding something that it will take years for others to reproduce, or is it a couple of companies trying to pick the first spot?
You know, it's a little bit of both. It depends on the particular subsector. So, you know, the example we just had here with Axogen, I mean, they've very rapidly, you know, developed something that's very unique in the market. They've got a bit of a moat around their business now for different reasons. So, you know, we would really put them in a very clear position of, you know, market and technology leadership. You know, other areas, it's more competitive, but you know, it does, you know, a lot of these companies, it does take, you know, long runways, it does take deep pockets to actually, you know, invest into these new areas. And it's one of the reasons that I don't want to jump ahead too much, but when we talk about the methodology with this strategy, our healthcare tech and innovation, we have inserted, unlike the other strategies, a debt and valuation screen. And it's really just the nature of this industry. You tend to see companies with more debt, with higher valuations. And we felt just on the edges, it was important to have a screen to make sure we didn't tilt too much towards that.
Yeah, clear, understand.
So maybe if we just go into a bit of detail about the methodology. So how does a company actually end up in the index? If we look at, yeah, thank you, slide 15 here, we have an internal database of well over 1,000 companies from all over the globe to actually come into the healthcare tech and innovation strategy. We're going to evaluate the company in terms of their revenue that's derived across these 9 subsectors. We're then also going to rank the companies in terms of their market leadership, their tech leadership, and their investment into their particular area of business. As I said, we're also applying a debt and valuation filter, but we then bring all of those criteria together to actually give each company a score. It's a 1 to 100 score, and it's the companies that score the highest across each of the 9 subsectors that are then potential candidates to come into the strategy. And I think it's really important to stress here, Jean-Paul, this isn't a one-time event. We're constantly reassessing these scores. You know, these companies evolve, competitors emerge. We're very involved with the management teams. We're looking at their financial disclosures. We go to trade show, or we used to go to trade shows pre-COVID to actually meet with them. We're engaging with the advisors. There's also a very strict ESG policy that we're applying here that would actually screen out any companies.
I wouldn't have expected any different. Is it one of the questions I got in preparation, working towards this presentation, is would you call this index, is it actively managed, or is it purely rule-based? Because if you look at these scores periodically, then you may see a lot of movements of constituents in your index, or not?
Yeah, we don't see too much movement. So we do every quarter we rebalance the strategy. So you know that's when we bring the company weights back into a weight based on their score. We see very few changes quarter to quarter. It's perhaps 1 or 2 deletions, 1 or 2 additions coming into the universe. So it's pretty stable. But
because one of the things I personally like about the ETF wrapped around your healthcare technology index is that one way or the other, you know, ARC always attracts a lot of attention, but these ETFs are not investable for us here in Europe. Yeah. But I was looking through the names in your index, and you know, some very important names that people like over there are in here as well. So I think it's a very good product since it has this usage status to look at this one. But perhaps I incorrectly single out one, but I was looking for this CRISPR technology. CRISPR therapeutics is called, but that's not included in your name. Is that then? Yeah, I don't know whether you know. Has that fallen out on particular reasons, or is it just too expensive? And can it come in at a later stage?
Yeah, it could come into the index. It's, you know, yeah, as you just pointed to, Jean-Paul, it was really, you know, a valuation fail on the filter.
Okay, so that's what I wanted to know. Yep.
Yeah, so we've you know, we benefited last year from a number of the CRISPR companies as it became very, you know, frothy and exciting what was going on there as we did our rebalances last year. You know, a couple of those companies had to be removed for now. But yeah, absolutely no reason that they can't come back in.
Okay, clear.
I just wanted to go back to what, you know, you're almost saying with the question there, because I think you're right. It's kind of both. It's active research, because everything I've just talked about in the first two boxes on this slide here is really us as an active research group engaging with our advisors around a set of rules and filters to score companies. So really what we're doing is we're building that database, that very concentrated database of potential index members. And we do that because it doesn't exist. You can't go and get that perfect database of healthcare tech and innovation companies. So that's what we do as a sort of an active research shop. But then we think the best way to make this investable is to turn this over to the world of indexing. So that's what's happening in the final two boxes. We then apply a series of index rules to make sure that the companies are tradable. You can see here market cap, you can see liquidity. We then have a very simple modified equal weighting. Basically, each score that a company has will dictate their weight, but it means we end up with position weights of something around 0.75 up to 1.5. So there's no concentrated bets in this strategy. We're not trying to time certain events. We're not trying to bet all of our money on CRISPR or, you know, an area of genomics or telehealth or something else. We're saying all of these areas are important. All of them over a multi-year period will grow. And, you know, as we think a smart investor, you want exposure to all of them.
Yes. Yeah, I'm with you. I'm with you.
So I don't know if we're going a bit long here, Jean-Paul. I was just going to touch on a few other sort of fundamentals and characteristics. I can sort of move through some of this quite quickly, but slide 16 in terms of geography, you know, it is an international strategy, but it is heavily tilted to the US at the moment. But you can see we've got 7 countries in total here, including the Netherlands. I should just emphasize.
At least we're there. Which company is it?
It's Philips.
Ah, right. Of course. Yeah.
Yeah. If we just go to the next slide, slide 17, we've got the subsectors here. I think, you know, I've talked about the 9 subsectors, how, you know, these are very much derived from, you know, our sort of in-house view of the opportunity by engaging with the advisors. The weights that you can see here for each subsector, this isn't fixed. It's really determined by, you know, the sort of the universe of companies, and then what type of exposure we want to each particular subsector. This evolves over time. You know, again, this is just like researching the companies. This involves our ongoing dialogue with the industry and with the advisors. You can see medical instruments is the largest at 29%. We've got telehealth is the smallest at 3%. And I think if you just look at the right-hand side, you can see some performance data for Q1 of this year, and then also for the past 12 months. But if you just look at something like telehealth, you can just see how it's gone from past 12 months, 47% to Q1 being minus 19%. And I think that just demonstrates why you can't time this, but you want exposure to an area like telehealth, but you don't want to have all of your bets on telehealth or any of these other subsectors. Frankly, it's very difficult to predict short term what's going to happen. So just like our other strategies, you know, one of the key words here is diversification.
Yeah, and I allow me for the viewers to mention it. I said it before, but I think it's important. I always like to look at returns because that gives you a feel. But obviously, the past 12 months, completely on the right, there's also a COVID part of it where all stocks went up. But I think on your previous slide, you clearly showed that even if you distract some sort of market average from it, then all these subsectors still outperform broader equity indices.
Yeah, absolutely. And if you don't mind, Jean-Paul, I was just going to go back to something that you touched on right at the beginning on this next slide. So slide 18 here, we're on the left-hand side, we're looking at the member overlap of our strategy. And first of all, we're looking at the member overlap by percentage weight across two broad market indices. So clearly you can see here we've got less than a 5% member overlap to the S&P 500, the MSCI, or World Equity. So, you know, already you can see that this is an interesting, you know, unique universe of companies. I think where it becomes very telling is if you compare, again, HTech to a bundle of other healthcare indices, and we actually looked at 39 here for this data, the average member overlap is less than 16%. So again, you don't see this portfolio of companies appearing in broad healthcare indices or even healthcare indices that are labeled as healthcare tech or innovation. I think it's very important, just because a label carries a similar name, don't assume that you're actually getting a similar strategy underneath.
Right. I think that makes it very attractive. And in these healthcare indices, I presume you have a lot of the traditional pharmaceutical companies, not in all of them, but in definitely some. And that's exactly the point you're making here. This is looking at disruption due to application of technology. And that is very striking. I think, given the problem in society that all people are aging, and we have to do something about it.
Yeah, exactly. And I think, as we said at the beginning, you know, Jean-Paul, if you look at what technologies like robotics, automation, and AI have done to, again, manufacturing, retail, logistics, they've just utterly changed the competitive landscape. It's very dramatic. And you know, for us, from where we sit, having already covered healthcare for 7 years in the robotics and automation strategy, healthcare is absolutely next. It really is. You know, we think there's a number of factors, as we've talked about, that are pointing very strongly towards that.
Yep.
So Jean-Paul, we can, you know, leave these slides with your audience. The next couple of slides, we go into a bit more detail on the genomics subsector. That's slide 20. You know, as I said a couple of times, it's a really important, you know, part of our strategy. You know, it's very exciting what's happening in there. You know, there's companies, as you can see, like this.
But Richard, if you allow me, I don't think all viewers do exactly know what genomics means. Can you explain it in simple language a little bit? What's happening here?
Yeah, so this is really the ability to sequence for human genomes. So, you know, this is kind of our sort of identity, you know, at an individual level. We started to do this, crikey, at least 15 years ago is when we, you know, had the first sort of significant breakthroughs. It literally cost millions of pounds back then just to sequence, you know, one individual's DNA, their genome. And
why would you do that?
Good question. You do that because it allows you to predict and diagnose very early signs of illness or cancer. So you can get very quickly and very early to a potential problem. What it also allows you to do is to then build a customized treatment plan. So again, if you think about healthcare today, we tend to bundle people together with similar types of illness or conditions or cancers, and they get a very standardized treatment plan with very similar groups of drugs, and different people react in different ways just because of their DNA makeup, and just their general internal biology. So with genomics and DNA sequencing, we can detect early the signs of problems, and we can build customized treatment plans, and that's what's going to be the game changer. What's really important here is, I just mentioned that did cost, tens of millions of pounds the first time we were doing it. You've got companies like Illumina that are very close to bringing it down to $100 per time. So, this isn't technology that's just going to be used by very affluent parts of the world. This is something that we can roll out globally, and if we can detect signs of cancer, for example, early, build that customized treatment plan and eliminate it early, and enable the patient to be monitored on an ongoing basis. They can just do blood tests at home to make sure that the cancer has stayed away versus coming back into hospital. It changes the healthcare system and the whole cost infrastructure that goes into it.
What comes to my mind is you showed us before that 80% of your index is invested in US companies. Yeah. But as you may know, I also have some sort of a hobby on China, but the Chinese, aren't they just as good as the US, or are they lagging behind? Do you have a view on that?
Yeah, look, we do. I mean, that 80%, Jean-Paul, is very much an outcome. It's not deliberate. It's just as we look at, first of all, the subsectors, as we said earlier, is very much our roadmap. That's where we want to identify companies. And within each subsector, for the areas that we want to focus, we want maybe, sort of one, maybe two market leaders. And to get to that, we take them through the scoring process. So we look at many Chinese companies as we're doing that. Often we might see, for example, that when we look at their market leadership, maybe their sort of business is it's China centric, which is obviously a huge market. But we're looking for companies that are more established, can really grow on an international scale, are clearly the technology leaders. So I think we'll see the mix change pretty dramatically over time. And yeah, absolutely, China will probably be a big part of that. If you look at our other strategies, certainly robotics and automation, you see a lot more China focus, and I think healthcare will follow. Okay,
it's just not yet in there, yeah.
Correct. Yeah, it is not excluded by any means. I mean, we have Ping An in there in the telehealth.
Okay, of course. Yeah.
As an example of one that is there. John, but I think the final sort of perhaps message I was going to wrap up with a little bit is just around ESG. There's 3 slides I think towards the end of the deck here, 23, 24. 25.
I like it here, Dexcom, because I think I told you my wife has diabetes type 1, yes, and she already has for 8 years a Dexcom meter. So this is the only part of the presentation where I know we're involved, and it improved her life dramatically over the last 8 years. So it's nice to see it there.
Good. No, it is nice. No, and let's just pause on it, Jean-Paul, quickly on slide 21, because within our medical instruments, subsector, as you said earlier, it's one of it's the largest subsector, and yeah, diabetes is this is something that impacts over 400 million people globally. So it's a very significant challenge to society. And we've seen such, just positive developments here around continuous monitoring and delivery systems. You can connect now wirelessly to an app on your iPhone that talks to the insulin patch that's stuck onto your body. So, you know, we really look forward to a lot of the new devices and innovation that's coming out of this medical instruments category over the next few years. But yeah, that's a great example.
Yeah, and I have some inside knowledge that I was actually talking to Elizabeth, my wife, about it yesterday. That I saw Dexcom,
Yeah.
and she said, "Yeah, I've just been selected for a competitive product to see because Dexcom is so expensive." And I looked at the chart; the stock is very high up. So I'll let you guys know how it develops. If she's very good with the new instrument, then we may have to take another look at Dexcom. But it's
yeah, well,
nice.
good luck. I hope it is better.
It's better, yeah.
And yeah, Jean-Paul, as I was just saying, I think, you know, final message probably just around ESG. You know, for us, you know, ESG is embedded into the 3 strategies. We look at it, you know, right at the very top as we identify a theme. We make sure that the theme itself is beneficial, not just to investors, but to society as well. As we look at the subsectors, we also have an ESG view to make sure, again, that the subsector itself, just by its nature, is beneficial to society as well as in investors. And then each company has to pass our internal ESG policy. It's on our website. It's been live for well over 5 years. We formalized it in a bit more detail in 2017 when we became a signatory to UNPRI. But I think the most important thing is, you know, this strategy has a very natural tilt towards being beneficial to society. I mean, everything we've just talked about.
I would expect it. You know, I can't really think of anything that you would exclude a company. Is it a machine or an application that uses too much energy, or is it certain commodities that are needed from?
Yeah, I mean, our you know, the ESG policy it's focused on things that might become relevant here, where it's, you know, human rights, but violations, environmental damage, as you just said, weapons, mass destruction. But no, this is a universe that doesn't rub into, you know,
Not really, yeah.
It's quite the opposite. So I just know how important, you know, sustainable themes are to investors, and particularly in your market in the Netherlands, Jean-Paul.
Yeah. Well, it should be. It's coming every time and again more, but it's important that it's addressed. And
absolutely. And if you don't mind, Jean-Paul, you know, slide, what is it, 25, I think. You know, we have a newsletter that we put out every couple of weeks. It's content all comes from in-house. It's from the research team. It's from our advisors. You'll see interviews with the CEOs of some of the index members. You'll see quarterly reports just talking about earnings and just giving insights as we look forward. So, you know, please sign up, and, you know, I think you'll find it educational and useful. I know you pass on some of those updates as well, Jean-Paul, yourself.
yeah, I was thinking, you know, I like the topic so much, and I know so little at this time. And
yeah,
through your newsletter, but also this presentation and the fact sheet, there's all these companies that are performing in this sector, and I'm definitely going to take a couple of videos and to follow certain stocks based on the news, what's happening, to that we all get a better feel of what's going on. But that this is very promising, that is, I think, clear to everyone, because it's really solving a problem.
Yeah.
And a problem that's getting bigger in the years to come. And it just strikes me, I know that, you know, when you're working in this sector, so to say, or with this sector, then you know all about it. But everything is about green energy in the investor markets. And I think this deserves a place definitely at the same level as green energy, because it's at least as important.
Yeah, absolutely. We agree. We're very passionate about it. You know, like our other strategies, and, you know, we put a lot of thought into constructing and maintaining the portfolio.
Yeah. Richard, I'd like to thank you a lot again for sharing your views and this presentation. It's a very good kickstart on the theme. We're going to follow it and hopefully we'll be in touch soon again when there is news and we can talk about it. Thanks a lot.
Thanks, Jean-Paul. Very welcome.